So my role at NAB is Agribusiness Manager. So I look after a portfolio of clients within southern Tasmania, either pre or post farm gate clients, from broadacre through to fruit, through to aquaculture. In terms of how I arrive where I am, I studied ag science with a speciality of ag business at uni, and through that got accepted into a graduate position with NAB approximately 9.5 years ago, and have worked my way through a couple of various roles since then to the role I'm in today. Yeah, so the major competitors are obviously the other major banks, so the likes of Westpac, ANZ, Commonwealth. In the rural sector, we also have competition from Rabobank and Rural Bank, probably the other two. But any other financier potentially, but they're generally who are our main competitors. I suppose how we operate here is we segment. So when I say that, I probably look after larger customers, however less of them, whereas there's another manager in the Hobart office who looks after more customers, but with less kind of requirements, so to speak. So it's not so much specific, it's around, just making sure that we've got appropriate time allocated and an appropriate customer base, so we can spend the required time with those customers and help their business grow. Yeah, so it's a combination of complexity, I suppose, in terms of probably lending, what their lending kind of volume is. So and or other requirements. So they might be a high transactional business or a high turnover business, or have greater lending volumes. Therefore, requires a lot more analysis and assessment. Therefore, generally speaking, if they've got over $3 million worth of lending, for example, I'd generally look after them. If it's under that kind of level, the other manager would look after them. It's dependent on a number of factors, but it's a lot of it's around complexity, and so theoretically you work, you might have the same workload, whereas the colleague that I work along has a lot more customers, whereas I've got a lot less customers, but we have the same kind of workload because my customers are more complex. Yes and no. I mean, I do look after kind of that mum and dad relationship, but with higher lending volumes and more requirements. And the other thing is sometimes we'll also have more of a speciality towards a sector, for example. So we might look after more customers within one sector, so we become more of a specialist in that area, and that also might determine what kind of customers we look after. Within Tasmania, it's quite diverse. So we look after a broad range of agricultural sectors within Tasmania. So from your broadacre cropping clients, sheep farmers, cattle farmers, through to dairy, vineyards, and aquaculture. We've got we look after quite a number of aquaculture clients down here. Oyster, and within that is oyster farmers, crayfishermen, abalone, those kind of sectors. Yeah, yep. That's a good question. I suppose a lot of the horticultural kind of businesses that we look after, or fruit businesses that we look after down here, are in the cherry or the apple industry. There are some small leaf growers as well. There's a lot of vegetable growing up the north of the state, so I don't have a lot to do with that. But I suppose if I'm just looking at the cherry or the fruit industry down here, there's probably a mix of mum and dad operations versus corporate structures, and we're seeing probably more corporate structures with than there probably was, say, 5 years ago in that industry. Yeah. Obviously, we have a minimum set of requirements for us to kind of form a view. It does come down a little bit to the complexity or the size of the proposal. I suppose we'll work with every customer individually, and obviously their requirements are different. So it's very hard to be kind of specific exactly in terms of what we need. But as a starting point, to form a bit of an initial view, we'll at least need, updated financial information or projected cash flow forecasts and a bit of a summary of their assets and liabilities, or balance sheet if it's a corporate type structure. I suppose it needs to be relevant to what they're looking to do. Yes, if it's an established business, we'd need at least a minimum of 3 years kind of financial data, or more if required. If it's a start-up type business, you'd probably expect to see a business plan with projected forecasts, but also assumptions. What's actually driving that cash flow forecast and the assumptions underpinning it. So income assumptions, what kind of yields, price, etc., and then expenses as well, and what's driving that. How are they coming up with those numbers? Yeah. Probably one of the key things we look at is the management and their ability to kind of execute on what they say they're going to do, and as part of that as well, obviously if there's it's probably not and assuming if it's something, there generally should be a plan or a succession plan in place if there is an exit strategy for a manager, and we'd probably like to understand what that's going to be. It's more around what's management's ability to execute on what they're saying they're going to do, and if they've done that in the past, so that's where you might get historical information to kind of verify that, and then what they're projecting, or what they've done historically, is that sufficient to service what debt they're looking to take on, reinvest back into the business, and provide an income stream for themselves, and then also the third part of that is, well, what's our security position look like as well, underpinning that. So once again, it comes back to, I suppose, every customer is different, all their circumstances are different, and depending on the complexity, what they're looking to do, will determine kind of what requirements we need. In terms of that, I suppose if it was, so no, I suppose it's not something that we'd require every single time. However, if it was such that it was a new startup business, or if it was a business going through a significant change to their structure, then we'd expect that the manager's done their own research and planning, and put that forward in terms of a document. And then I suppose we look in that in conjunction with what their ability has been historically to execute on what they say they're going to do, what their ability to repay or service their debt is, so there's a whole lot of factors that come into consideration. Yeah, it can sometimes. Yeah, absolutely. So it might be depending on the size of it. It might be that if they've got good debt to equity, they've had a strong track record of proven financial performance. What they're looking to do is they can still comfortably service, repay, reinvest back into their business and provide an income stream. And then similar to a home loan at times. We look at mainly, like, if it's lifestyle, we more look at the primary producers. So it still might be that case, like it might be a good, strong agribusiness that, and we'll conduct our own, we can do our own analysis as well, mitigate any risks that we see as part of that transaction, and Yeah, I suppose we work with our customer through the application process, and to obtain a thorough understanding of their financial situation. So, an objective is moving forward. We've got a range of tools and calculators on our intranet, but generally speaking, it'll be, the first meeting or the first or second meeting will generally be on farm or on site with the customer to get a good understanding of their business, understand what they've done, and look to assess it in that way. So look, we do our own. We come out on. Generally speaking, I go out to a lot of whenever a customer comes to me for assistance or anything like that. I'll generally make an appointment to go see them on farm, and and generally do the catch up. And we look to do that quite regularly anyway to see, with our clients, for us to obtain an understanding of what they're doing, what they've done, and I wouldn't say we engage agronomists or anything of the like. If the circumstances require it, we may. We have a range of, we've got specialists in that, so we have trade and working capital specialists, which we engage with customers, if they are looking at exporting or importing, to look at appropriate facilities and structures, but also ensuring that they mitigate the risks associated with export in that space. So yes, we do assist customers in that respect. It's probably hard to kind of generalise, I suppose, but we have definitely assisted customers in growing in that export space via providing appropriate structures for them to access working capital and increase their and increase sales, and we do that via having an understanding of their business, engaging our trade and export specialists, and working with the customer to put in place an appropriate solution. They are different from other businesses, I suppose, in terms of, and I deal with a range of agribusinesses from broadacre through to aquaculture. Typically their cash flow's more seasonal, and capital investment is high, therefore longer term solutions are more appropriate. And we have tailored specialist agribusiness bankers to help assess and support our customers. Well, I think agriculture is definitely a growing sector. I suppose you've just got to, if you look at it fairly basically, I think the world population's projected to nearly double between now and 2050. So we have to have the ability to feed that growing population. So if you look at it in that respect, it just is natural that agriculture is going to have to grow, and is a growing sector. So saying that, I think people within agriculture, will have to become more efficient, adopt the usage of ag tech, or just become a lot more efficient in how they grow things, and utilise their own natural capital as well on their farm, making sure that they're doing things in a sustainable way. NAB supported agriculture for a long period of time, and has full intention of doing so into the future. I suppose the key for me is to make, if they are preparing, to make sure that they're taking ownership of the business plan that they're preparing. They're completing a risk analysis, or like a SWOT, so your strengths, your weaknesses, your opportunities and threats. But the key is taking ownership of it, and it's because it's your business plan at the end of the day, and you're the one, if you're coming to the bank, who's borrowing the money and ultimately responsible for repaying it back. So I think, by demonstrating that you've got a full understanding of your business and the risks associated with that, will greatly assist the bank in completing a thorough analysis.